Many of you have been asking me why I'm so positive into Alibaba stock and whether there are any potential risks by investing into Alibaba. Therefore, in this video, I will be sharing with you all the disadvantages and worst scenario when investing in Alibaba so that you can be aware of it. Risk number 1. Alibaba is actually the biggest company in the whole of China based on market value. You may be thinking that this is a positive factor as Alibaba is big, having a proven track record and at the same time having the majority market share in China. And you are definitely right. But we also have to take note that usually the bigger the business, the slower the growth rate is. Based on Alibaba's past 10 years track record, the revenue growth have been amazing. However, you can also notice that the exact growth rate, not growth, the exact growth rate has been decreasing throughout the years, from 72% in 2013 to 35% in 2020. Anyway, this is perfectly normal. Let me use analogy to explain this. For example, we plan to travel all the way from New York City to Florida by road. We can either drive using a motorbike or a big truck. And which vehicle do you think will reach our destination first? The motorbike or the big truck? And you're right, the motorbike will most probably allow us to reach our destination in a shorter period of time because the motorbike is smaller, faster, and able to sweep through the traffic ahead. And this is why typically smaller companies are able to grow much faster. At the same time, although the big truck is much more stable compared to motorbike, it is much bigger, moves slower, and it usually stuck in the traffic most of the time. This is exactly what happened to Alibaba right now. In the past, Alibaba was like a motorbike on the road. It was a small company that is able to make decisions faster and execute business ideas immediately in a shorter period of time. But today, Alibaba is like a big truck that has many obstacles in front of them in the traffic because it has grown bigger and already achieved majority market share in China itself. Moreover, Alibaba's size and power in the market right now has attracted much attention from both US and the Chinese regulators. Looking at the 4 stages of business cycle, I feel that Alibaba should be in the last part of the growth stage because Alibaba is still growing at a fast pace of 35% per year. Yet the absolute growth rate has been decreasing throughout the years, which means Alibaba growth rate has been slowing down, by the way. Risk number 2, Daniel Zhang, the CEO of Alibaba, has little to no skin in the game at all. Personally, I prefer a CEO to have a significant ownership of the company because this shows that the CEO has aligned interests with all the shareholders. Only when shareholders are making money, then the net worth of the CEO will increase. Moreover, having significant ownership will allow the CEO to work harder for himself and the company. Although Daniel Zhang may have some employee stock options here and there, but based on my research, he does not have any significant ownership in Alibaba Group itself.
No! God, please, no! No! No!
So we as shareholders have to take note of this. Risk number 3, the e-commerce market in China is getting more and more competitive. Although Alibaba have achieved more than 50% market share in the whole of China, strong competitors like JD.com, Pinduoduo, and Sanning.com are rising really fast. One example is Pinduoduo, which is the largest agriculture-focused technology platform in the whole of China, and it is growing at a rate of more than 100% per year in terms of revenue from 2017 all the way to 2019. This is amazing, and I believe that there will be even more competition in the future as well. Anyway, the reason I'm sharing the disadvantages of investing in Alibaba is not because I do not like Alibaba. I'm still an Alibaba shareholder and I do believe that Alibaba will still continue to grow. My objective here is to share with you the disadvantages of Alibaba business so that we Alibaba shareholders can all take note of it. The last thing I want is us Alibaba shareholders being blinded by all the positive factors only and not taking into consideration the weaknesses of Alibaba business, because No business in the world is perfect. There are always weaknesses and things to take note of in any business. We as Alibaba shareholders or potential shareholders just need to understand what are the weaknesses and ask ourselves whether we are able to accept it. If we are unable to accept the weaknesses, we should not even invest into Alibaba at all. Only if we are able to accept the weaknesses, then we can consider investing and stay in peace. Do comment down below to share with me what are the other weaknesses of Alibaba that I missed out, because you may know something that I do not know yet. Do watch this video right now to discover whether Alibaba or JD is a better investment for you. I will see you there.